Folks, welcome to Sunday Night Futures Live. Another Sunday. I'm using brand new software tonight because I'm actually simulcasting on multiple platforms, and I want to make sure for a second that we're good to go here. Facebook looks like it's working. Twitter's working. Yeah, baby. I spent a lot of time on this, getting this up and running. All right, we'll see what we got here. We are on Facebook. Yeah. And of course, YouTube. Okay. Thanks for being here. Looks like we already got a super chat from John from New Zealand. Hey, John, what's going on down there, man? Between New Zealand and Australia, it's dystopian. Is everything good by you? Now, can you folks see the chat? Well, hey Bob, looking at BMY for, is that Bristol Myers Squibb? Hey Bo, hello. There's John with the super chat. Thank you, sir. Did you want a symbol, John? Well, BMI, we're going to look for that turnaround. We'll take a look at the chart. Hey, Bo. Hey, Bob. I hope you had a good weekend. Same to you. Can you please do some technical analysis on a chart of NeuroPace, NPCE? Sure, we can do that. Where's my book? What else do we have? NPCE, BMY. What else do we have? Falcon, you need Rumble and I tried, man. They don't integrate yet with this software. So the minute they do, I'm definitely going to be doing it. No doubt about it. It's crazy that they don't have that yet. Okay, let's see. Joseph Gardner, FCUUF. All right. John. Hey, how would you play TTT or TBT long using options? Any comments on US dollar direction with tapering? Yeah, we'll be talking about the dollar. So we had the European elections, actually not European, German elections over the weekend. Undecided outcome of the election, very close. So that may put some pressure on the euro, therefore strength on the US dollar. We'll talk about that. How is everything going in New Zealand? Can you even, if you can't talk about it, just say I can't talk about it. It seems pretty scary stuff. New format looks very good by Will. Thank you, Abel. Paul. Kirk. All right. Randy. Thoughts on Facebook? Wow, everybody's active tonight. Looks like everybody's on YouTube. Nothing yet from the other platforms. Okay, so we have our list of stocks that we're going to go over. I want to kick things off by first talking about our. Oh, John replied back. Let's. Yeah, we can't go out much. Just exercise. Crazy, man. Yeah, I'm sorry, man. It's dystopian. It's all part of a plan. Pelosi passed 3.5 reconciliation bill yesterday. Any impact on the market? If anything, right now, it's going to help the market. I'll take you back to. I don't think it didn't pass yet. She's going to have a vote coming out this week, and she's talking about that this morning. That she's not going to bring it to a floor vote unless she has the votes, and she's pretty good that way, to be honest with you. As much as I can't stand her, she is pretty good at her job. But remember what the economy needs, what the stock market needs. It's not enough to have Fed accommodation anymore. You need spending. So this is all part of a plan. It's all part of a master plan. You get fear. The coronavirus is the fear. All these people are doing right now is they're setting everything up to blame the CCP virus for whatever's coming down, Armageddon, when they need to finally try to get a stranglehold on this debt that we're racking up. So we're going to talk more in a couple of minutes about the next leg in the game. It's not pretty. We're not going to be talking about fun stuff tonight. You want happy-go-lucky stuff? Go to CNBC. They're plenty loaded up with these slick-back Wall Streeters, the thugs, the banksters, and they'll give you the hopium that you want. We're not here to provide hopium, so we're gonna, as we normally do, we're gonna talk straight. John, with TBT, TTT. Okay. All right. So let's first shout out to our sponsor, which is our friends over at TrendSpider. Folks, don't settle for ordinary trading software. You need to go to the next level of sophistication, and that is automated technical analysis. You're going to see me using it tonight. It's a time saver. I can't pound the table enough on how big of a time saver it is. So speed up your technical analysis while improving your accuracy. There's no sense in speeding up your analysis if you can't improve your accuracy. Reduce costly analytical mistakes and time your trades with precision by using their alert system. Find winning chart setups with their scanners. Take a 7-day free trial offer. Visit their website. Use the link below. Start your 7-day free trial offer. They have a demo tour, lots of tutorials, good stuff. There's a plan for you. Take advantage of it. Use my discount code CON35 and use that link below. It'll take you over there. And let's get to the show. Okay. So first, let's take a quick walk through the futures action. And we're going to kick things off with the E-minis. This is going to be a 4-hour chart. These will all be 4-hour charts unless I say otherwise. And we are starting the week out up. And the first thing I like to do is I want to know when we make new weekly highs or new weekly lows. Okay. So we're good there. Okay, our alert is set. Good looking chart. Let's take a look at the Russell 2000. The Russell 2000 is up just shy of a 0.25 percentage point. Same as what we did with the spiders. Let's create our alert. Moving on to the Nasdaq, up fractionally. We're going to have resistance above here. We hit it on Thursday. Okay. So equities looking good thus far. We did not put in a new weekly high on Friday. No higher high sequentially. The indexes did turn around last week with the exception of the Qs. Let's take a look at the US dollar. Yeah, the dollar is getting spiked up. My guess is that the euro is down because of concerns out of Germany with the election being undecided. And that is not the case. So the euro is up along with the dollar being up. Let me check the chart. There may be a Friday quote on the dollar. Yeah, it's not as what it seems. Forget this. We're technically down relative to the Friday close. This is a 15-minute chart. So euro is up, dollar technically down. This will update in a little while. Let's go back to the 4-hour chart. Let's see how gold is performing. You know, before we leave FX, let's take a look at the yen. The yen is up as well. So you have the euro up, the Japanese yen. It doesn't look up at all. Again, it's a pricing issue. This will update later on. Yeah, the yen is down. The yen is down. For John Spence, let's take a look at the New Zealand dollar. And it is up. Okay. Now let's take a look at gold. Shit, you get caught up on comments. Anthony, high-tech stuff here, Bob. I like it. Oh, yeah. I had to diversify. I love YouTube. Many respects to YouTube, but they're throttling back my my videos because I say some things that are not politically correct, and I can't have that. I can't run a business like that. What's disturbing is that Rumble, which I played with it early. I haven't figured it out yet. I'm going to have to set up another access to Rumble because they're not yet on this software that I have. So we're streaming right now on Facebook, Twitter, YouTube, Twitch, and what's the other one? DLive. But I want to get on to Gab is supposed to have a streaming service set up. Rumble, definitely need to get on that. So we're definitely going to be looking to expand our horizons a little bit. Joseph Gard, thumbs up for it, Bob. Thank you very much. Buster Stacks, haven't seen you in a while. IWM dead money all year long. You know, I have a short position in it. You know, you took a look at one chart. You take a look at the monthly chart of the trend. I may even talk about it later on if I remember. You take a look at the chart of the IWM monthly time frame on stockcharts.com. It looks as though it can go in either direction. The argument could be made that it's very tired. Whereas you take a look at the chart of the monthly time frame on TrendSpider, it looks like a monster consolidation. So, you know, while I still maintain that short, I'm not going to stick around long if we begin to break out of this trading range. So we may just have to bail on that trade. And I have a chart later on to show everyone about where we are historically to prior major crashes in the market from 1929 forward. So it's pretty interesting. Buster Stocks IWM year-long base, but this time the ascending 50 SMA has almost caught up, and that's what I was worried about. If it goes, it could be a good run. Yes, no doubt. I'm not, I have a short position. I freely say it. The however is that we've been in this trade for quite some time. So at some point in time, you got to poop or get off the pot. And if it begins to break out, then we're going to have to reevaluate that trade and quite possibly exit. Let's get back to the charts. Oh, you know what? Yeah. Thank you for that. Watch this. Pop. Okay. So I need to now take this off. Bear with me as I learn this, folks. I have to take there we go. Okay. That's better, right? Okay. So gold down fractionally, but gold is consolidating here. We did hit a strong support level last week. It held. We bounced off the lows. Good, John. So gold, good. Despite the fact that we're down, let's check out silver. Silver is up. Rough week last week for silver. But Bitcoin. Bitcoin up strong. I'm going to talk about Bitcoin in a moment. I'm very, very skeptical about crypto. And I'll share with you why in a moment. Bonds. Bonds are down, despite the fact it says up. They're down relative to Friday's close, which was here, and that means that yields are pushing up yet again on the week. So rising yields. What we're entering into right now, effective last week, is the reflation trade. But there's certain assumptions need to be made about a reflation trade. Is that the economy is coming back to life? There's nothing that was reported last week that would give any semblance of a recovery in the market, in the economy. So we're going to walk through that in a moment. So bond yields getting pushed up higher. Traders are buying into the Federal Reserve narrative that they're gonna move forward. They're gonna full steam potato with taper, raising rates. They said they're going to do it. I don't know if he listens to himself or reads his own script beforehand. He said that this is Jay Powell said that we're gonna go slowly with taper, but then he says we're going to be done by mid 2022. So you're going to go from $120 billion per month down to zero in 6 months. That's hardly a slowdown. I had expected a taper spanning years. That's not what he said. Maybe it's 6 months of just tapering, and then they're going to have to goose the tapering back up or throttle it back and goose up the bond buying. Larry, it's time to short Bitcoin, Bob. China says crypto. Boom. It's so funny. It's the same exact thing. I'm going to go over an article in a moment about that and next steps here and globally for digital currencies. It's dystopian. Scary stuff. Bond prices are ticking up now. That means that we may see a reprieve on yields moving up higher. Let's see if gold is reacting. It's coming off of its lows, but still down on this session. Okay, let's get to AT&M. You're up. This is JW. JW was on earlier when I was testing out the platform. Sorry for the false starts with going live. JW, ATNM, you're up 58%. Awesome. Good for you, man. Okay, let's get ready for the new trading week. And if we have time, I'll circle back. I'll see how we settle out the futures action. But let's begin with I'm going to take these off. I'm going to hide that now. Okay, now I can be seen. Okay, cool. And for whatever reason, I can't bring my image over to the lower left. So I don't know if that's going to cause a problem with the charts, but we'll see. Maybe it's not going to mean anything, but I'm just worried about that. Okay, last week we bounced back, right? We're going into the week. Breadth was very, very poor. We did see a reprieve last week. We saw market breadth improve. The however is that we have the percentage of S&P stocks above their 50-day moving average in green is still below the mean. So we bounced off of a 1 standard deviation move from that mean. So no great shock with last week's bounce. Does it continue? Do we continue to see improved market participation? And that's really going to matter going into the new trading week. Economic data coming out this week, durable goods are going to kick it off. And that's important. Those are going to be your washing machines, your dryers, big ticket items lasting a number of years. So there's going to be a lot of economic data coming out this week. Tuesday, trading goods advanced report. We're going to get the S&P Case-Shiller home price index. No big deal there. I think this is going to validate that home prices continue to move higher, although you may see a softening in the market. Building permits last week were pretty good. They beat expectations. That's a forward-looking indicator. Consumer confidence, big number. Very, very important. Wednesday, pending home sales, not that big. Thursday, initial jobless claims. So last week, initial jobless claims came in hotter than expected. Not good. Also, the prior reading, which came out better than expected, was revised higher. So not too good. Real gross GDP, the revision, I don't know if this is the last one or not, probably is. We'll get the final read, I guess, on Q2 GDP. Chicago PMI, Purchasing Managers Index. Friday, real disposable income. Real consumer spending, inflation data coming out this week, core inflation. Then we get the manufacturing PMI, and we get the services PMI. You want to see a reading above 50. That's a sign of expansion. A number below 50, that's a sign of contraction. Construction spending, consumer sentiment index final. I don't know what that is. Maybe it's a revision to the prior. 5-year expected inflation rate. So a lot of inflation data coming out this coming Friday. And this is the final trading week of the month. Going into the new trading week. Franklin. Hey, brother. How you doing, man? It's time to show up. Yep, I went over that one. Sorry for the duplicate. I'm playing around with my toy right now. So we go into the week strongly overvalued. We are at a 3.0 standard deviation. Move beyond the historical trend. We have been higher to 3.1 2 weeks ago. The Shiller PE ratio, second highest since the dot-com crisis at 38.48, very overvalued. Talking about the technical of the market, you know, this chart here brings you back to the 1921 to 1929 time frame. And you could see that we were in a rising uptrend channel back then. We blew through the upper band and we went parabolic. Fast forward here to 1994 to 2000, same deal. We broke out above that upper band of resistance, consolidated with a bias to the upside, and then we went parabolic. Here we are now. We broke out above the upper band of resistance. We have consolidated. We have begun what I believe to be that parabolic move up higher. How long will that last? We don't know. But it appears as though that in all likelihood, the path of least resistance for the overall stock market remains to the upside, and we got to resign ourselves to that. But get ready for the catalyst that can send this market down lower. With regard to news coming out over the weekend, we already went over this kind of. This ultimately did not have an impact. Socialist Democrats and conservatives tied in German exit poll. They don't know who the winner is. Maybe it's come out since I pulled this up, but I expected pressure on the euro. Didn't happen. Coming out this week, Pelosi to play chicken with House Progressives, schedules 3 votes for next week. That must pass. So what happens if they don't pass this spending bill? You're probably going to see a disappointed stock market. They need more heroin. You got to have that heroin getting injected because you have the law of diminishing returns. Remember, the Federal Reserve has been pumping in $120 billion per month for over a year now. And with each month that passes, the more bang for the buck that you get out of it gets lesser and lesser. They need this spending bill. Now, this is to my point that I've been hammering home for quite some time now, is that I would never buy a stock related to the CCP. This is an article off the New York Times. You got to pay for it to get in there. But I get the gist of the article. I would never pay the New York Times a single penny. They probably take enough money from the Chinese, allegedly. So the Chinese government position is that Western investors are sophisticated and they should know the risk. I agree with the CCP. I agree, because we've been saying it here for a long time now. If you're buying these Chinese stocks, you have a senior partner that is the CCP, and that is not a partner that you want to have. There's no transparency. You have no rule of law over there. So, you buy these stocks at your own risk, and it's a far greater risk than a United States-based company. So this is where we start talking about the digital yuan. And I have a prediction about the digital yuan, because the Chinese, they want global dominance, and they're well on their way. They have their act together. Let's face it. Let's put it this way. They released a cold on the rest of the world, and their GDP is exploding. Why? Western governments are printing money and purchasing stuff off of Amazon that gets made over in China and then shipped back to us, and they're booming over there with no consequences. They even disbanded the team of scientists that was supposed to study the origins of the cold, and it was disbanded. That's how much influence they have. These are U.S.-based scientists. So the Beijing is rolling out the digital yuan, and this is really going to put the cherry on the cake for their social credit score, and they're cracking down on crypto. Why? They don't want any competition. Why would you issue a digital yuan and allow your people to escape the digital yuan and go into crypto? And if it's happening there, in all probability, it's going to happen here. Because this is off of zero hedge. Central digital bank currencies, a future of surveillance and control. I spoke about this on Thursday Night Stock Charts Live. I said, be careful. It's coming. They want an excuse, meaning the cold, to get people fearful. Then they want them to get compliant. Then they want to have you have a vaccine passport. They want your life on this phone. And then the Pimp Mac Daddy of them all is having a digital dollar, digital euro, and then they could do whatever they want. And I even mentioned, and I go to comment, guys like you're off your rocker, you're a conspiracy theorist. And I'm reading this article. Because in fact, I'm going to play this.
Our analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know.
See that? They don't know who's using a $100 bill today, or
who is using a 1,000 peso bill today.
A 1,000 peso bill today. Why do you need to know that? They feel that they need to know who's spending that.
A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability.
And that is our future. Get on the phone with your congressman, with your senator. And where is it? This is a long article, but I read through it. I'm going to share this. You can read it at your leisure, but I had mentioned on Thursday night Stock Charts Live that they could put an expiration date on the currency. You don't use it, you lose it. Oh, here it is, right here. For example, the digital yuan can be programmed to be activated on a certain date, programmed to expire on a certain date, programmed to be only valid for certain purchases, and ominously programmed to be only able to citizens who have met certain preconditions. That's the social credit score. Get on the phone, haunt your representatives. We're not there yet, but we are well on our way. Look at Australia, look at New Zealand, the crackdown there. Let's talk about inflation. Go to some comments first. Will, scary. No wonder firearm sales are at an all-time high. Yeah, and unfortunately for the Australians, of course, these are good people, man. New Zealanders, we have a New Zealander on, John Spencer. These are good people. Crocodile goddamn Dundee, for Christ's sake. Who doesn't love Crocodile Dundee? And unfortunately, they turned in their armaments back in the 90s. And I guess I can move this. I guess I can't. It just said I can move this. Here, look, drag to move. All right, drag and move. That's not what we wanted to do. Okay, I'll figure it out another time. Scary, no wonder why firearm sales are all the time. Yeah, so the Aussies turned in their arms, and now these police are, I've been watching videos, and I had to stop because they have people in handcuffs. These people are arrested. They're on the ground, they're arrested. One cop comes running up to the guy who's in handcuffs, laying on the ground, kicks him in the face. It's not as if the guy hit him. He just came running up and kicking the guy in the face. 70-year-old grandmothers are getting knocked to the ground, beaten up. This is nuts. And it's like these cops relish it. It's crazy. It's really crazy, man. It's really disturbing. Let's talk about inflation. This is only getting worse. I went out last night to for my daughter's birthday. And I took her to this very nice restaurant. My son and my wife were there as well. And I was looking at having a Kansas City ribeye, and my eyes popped out. It was like $80 for a Kansas City ribeye. I was like, you know what? I haven't had duck in a long time. That's literally half the price. And I said, I'm going to go with the duck. Screw it. I'm not paying that money for a piece of meat. So inflation is on the rise. And I was in Stop and Shop. That's our local supermarket here. And I was behind this little old lady, and she's looking at the honey that comes. It's got the bear. It's in a bear canister. It's shaped like a bear. And she turns to me and she goes, "My God, look at the price of honey." And I looked because I usually get it once a year for tea when I get a cold, or family gets a cold. Last time I bought honey was like for the same thing, same exact thing. As a matter of fact, here, damn it, right here. This is it. This was like $3.50, almost $6 now for this. It's insanity. And the package has probably gotten smaller. So Costco warns toilet paper shortage. Empty. So it continues. Amen. Arena of Idea Racing. Who else do we have? You can't see. You can't see? Can everybody see? I'm sharing an article off of Zero Hedge. Falcon. There's only one thing that can support all of this, and that is blockchain companies. It does a lot more than crypto. Yeah, I think that, I think there's a lot of value in that. I think that our elections need to go to a crypto ledger, to be honest with you. It's insanity. So yeah, I agree with you. But I think in terms of currencies, I'm worried. I'm very, very worried. If I own Coinbase, and I'm worried about it. Okay, moving on. Sticking with inflation. The Russians, the Germans are very smart people. And you'll remember that President Trump tried to, he begged them, listen, please don't go with the Russian pipeline. Don't do it. You've asked us to defend you. We've done it for the past 70 goddamn years. Don't do it. We'll sell you our natural gas. And you don't have any security risk. And sure enough, what are the Russians doing? They're slow walking the natural gas over into Europe. What's that causing? Prices are blowing through the roof. Oh, you couldn't see the honey barrel. Interesting. Wonder why that is. Let me see. Oh, but maybe I had the message in front of it. There it is. That's it. Blossom Hill, pure honey. Very good stuff. I am not getting a promotional, I am not a promoter of this company or getting paid, but I do love their honey. So inflation, lots of inflation coming down the pike. It's already here. And this I found interesting. Various other markets outside energy, such as fertilizers and ethanol production, would be affected by structurally higher gas prices. And Europe is already highly dependent on renewables. They ain't cutting it. They're not ready for prime time yet. Yet what are we doing? We're not learning a lesson. They're going to go with the Green New Deal. That's what this $3.5 trillion package is, Green New Deal and social welfare. They're going to call it human investment. Let's go on to, okay, so inflation, we've been talking about it. As margins begin to slide, corporations choose to defend their profits or absorb transitory shocks. We'll know what they're doing by keeping an eye, as we always do, on the PPI, that's the Producer Price Index, and the CPI. So we'll see whether or not they're passing along their costs to the consumer. But you should expect that this is going to become an ever-growing problem for the markets. What if they don't pass them along? What do their margins look like? What do earnings look like? And if they do pass them along, what does demand look like? So this is like a toilet bowl, that downward flush of water getting sucked down. This is what's happening to this economy. It's the impact. Nothing good comes from inflation, despite the fact what the Federal Reserve wants you to believe. All they want is a US dollar which deflates in value. They want to try to inflate away our debt. That'll keep, by continuing to print money, it'll keep the stock market aloft. We have Fed governors trading the stock market. We have Nancy Pelosi and a number. It's not just on the Democratic side. This is not picking on Democrats. You got Republicans doing it as well, trading off of inside information, a pox on both of their houses. FedEx last week came out and warned. They warned, and you should expect to see warnings begin to pick up moving into earnings season, which is just around the corner. So what happened to the share price of FedEx? It got clobbered. I'll go to that chart in a second. But take a look at the leading economic indicators. You have that's in blue. FedEx, which tracks very, very closely with leading economic indicators. And you can see that as FedEx goes, so goes leading economic indicators. We are here. We're not seeing a massive correction yet in leading economic indicators. That, however, is this. I'll take you back here. Take a look at the economic data that was reported last week. You had building permits came in. That was a positive. Housing starts. That was a positive. Initial jobs claims. Big miss. This is just for last week. The prior week was revised up as well. The Marquette Manufacturing PMI, Purchasing Managers Index, signaled expansion above 50. A reading above 50 is a sign of expansion. However, it missed. What was even more concerning is that you have the services. Remember, the U.S. economy is by and large a services economy, and we're hovering just above expansion. The problem is that last week's numbers missed and came in lower than the prior read. So we're beginning to see slowdowns in the economy, and you're going to see GDP numbers come out. They're going to look great, but remember why GDP looks great. It's not because of organic growth here in the U.S. economy. It's because we have been buying stuff with printed money, stimmy check money, buying stuff on Amazon. That sale gets chalked up to our own GDP when actually the product is made over in China or wherever else is being made. India now, Vietnam to a large extent is a beneficiary of the supply chain switch from China to other avenues. Okay, we'll skip this. What time do we have here? 6:43. We have some charts to go over. Couldn't see the honey bear. Got it. Okay. Who else do we have here? RB. Hi, Bob. Thank you for all you do. Thank you for being here. Appreciate it. I love doing it. So if you're not here, then I lose value because I love doing it. So let's do some chart requests. I want to try to preserve some time and go back to the futures to see how they're settling out. Again, folks, we're being sponsored by our friends over at TrendSpider. So please take advantage of my 35% discount code. Use the link below. Discount code CON35. Yes, 35% discount code. Take advantage of it. And let's go to first the members area. I looked early. I didn't have anything to do, but sometimes they come in late. Nope, nothing to do. All right, MPCE. Okay, this is a 45-minute chart. Let's go to a monthly chart. I'm not familiar with this company. And let's take this off. Okay. Monthly chart. Not a lot of data here, but it's certainly not a chart that is screaming a buy. I only wish we had more data to show historical support, but we don't have that. Wrong chart. Weekly chart. All right, so last week was interesting. You may get a short covering rally here because we did a reversal last week, which I always like. We bounced off of what, 1620, and we closed higher. So that now it becomes interesting. Let's mark our resistance levels. This is actually support level now. 1708 now becomes support. $18.11 becomes resistance. Where do we bounce off the highs last week? The high of last week was $17.92, just shy of that resistance level. So not surprising. Daily chart. Let's take the automated trend lines off. Nice consolidation here. RSI is rising. You could see that the automated trend lines are picking off a number of resistance levels above. The first one would be up at 1886. After it gets through my resistance level at around 1811 per share. I like the consolidation. I like the weekly chart. I think as on spec, it could be bought. And in fact, again, wow, I just picked this off. You take a look at the automated trend lines. Where we bounced is exactly where the automated trend line found resistance. Folks, you're not using this? Take advantage, 35% off. Big time saver. So MPCE looks good for a short-term swing trade. You're probably going to get a rally, right? But don't think that that's the bottom for that monthly bear market to get fixed. You're going to rally. You're going to pull back. You want to see a higher low. If you break back out after putting in that higher low and take out the prior high, then it becomes an investment. Not right now. Right now, it's a short-term swing trade. Okay, I'm seeing a lot of requests come in. If we have time, I'll definitely get to it. BMY. What the heck is that? Wrong screen. Okay, BMY. I believe this is Bristol Myers. Yeah. Interesting. This is a daily chart. We'll come back to this. Ugh. Monthly chart. Horrible. Horrible. No bueno, man. We broke the rising lower band of support. I mean, this has been a long-term consolidation. This is a 2-year consolidation. And it's broken. This is nightmarish. You know, you may, this coming month, meaning October, get a rally back in an effort to try to recapture. That's just a retest. But, man, I'll tell you, this is concerning. Very concerning. Longer term. Weekly chart. Here's the break of support. Right here in green. I think that you're probably going to get a rally fairly soon because the daily chart, keep in mind before we leave the weekly chart, down volume, very, very heavy. Institutional distribution, daily chart. Now, you could see that with the automated trend lines, if you were tracking this stock, you would have been watching this lower band of support here, and because it bounced. The problem is, I don't know whether or not it holds because you have a tremendous amount of resistance above here. Note all the wicks, shadows, topping tails, call them cupcakes. It doesn't matter. What it's implying is that while we have bottomed out here, you have a lot of sellers above. So beware. If you get a retest like you did back here on the 22nd of support, that would take you back down to at around 59.50 per share. So that would be a good entry level if they decide to wipe out more weak longs. But I wouldn't buy this stock right now. Way too much overhead supply, continuing to sell, weekly volume not looking good. I would have to say avoid. And if honestly, if it breaks, I guess I could use this. If it breaks last week's lows at $60.05 per share and closes there, it becomes a short. But keep in mind, this lower band in blue is going to act as a trampoline. FCUUF. FCUUF. Hi, everyone. Hi, Jody. How you doing? Welcome. John Spencer. ARK has been selling BMY. That makes sense. I'm shocked that they even own BMY. Is BMY a short? Well, me personally, let's go back to it for a second. As a short, I'd be watching the weekly chart. What I would want to see here is BMY find some support and rally right back up to what was support for 2 years. Now becomes resistance. I would look to short into that resistance level because if we happen to close back above this resistance level, you want to stop out, right? So you have a lot of downside potential, meaning I should say a lot of downside movement to go if we fail to break back out, and you have very little risk if you decide you're going to close, if you get a close back above resistance. So very little risk, lots of reward if you wait until they retest this breakdown point. All right, FCC, let's hide that. Will is looking for 56. There's no reason why it can't happen. You know, if this is a decline and going back to the daily chart, there's no reason why we can't just bounce off of this all the way down to $56 a share. All right, FCUUF. Not your classic textbook double top, but it could be. I wouldn't be the least bit surprised to see a breakout here. You are seeing, as you're seeing on BMY, lots of topping action. So resistance is at, what is this, a penny stock? Oh, 70, call it 79 cents per share. You have support below, as noted by the automated trend lines. If you're going to buy, just use a stop right below Friday's lows on a closing time frame. RSI is not going in the right direction. And this is Fission Uranium, a uranium play, obviously. I don't know the company. I'm very, very skeptical of penny stock mining stocks. I don't care if it's a gold stock, silver stock, uranium stock. Very, very skeptical of them. You'd be better off in a fund. Sprott has a uranium fund. So we bounced off of weekly support in blue. We're probably going to bounce around inside this trading range for a while. So I'm not personally loving the chart, and I really don't trade penny stocks all that much. So just be careful with this one, because if it breaks new weekly lows, that means it's coming down here to around 53 cents per share, and that's a big move on a percentage basis. Lovely friends today support WAZIRX token. Okay. I don't know what that means, but okay. What was that? What was that noise? I'm still trying to figure out this software, folks, so forgive me. Sometimes this thing lets out a noise. I'm not quite sure what it is. All right, so let's move on, and we'll go to Kirk. I'm not sure what Kirk is. Oh, Kirkland's. Yes, I do know who Kirk is. Okay. It broke monthly support in July. New monthly low last month. This month, no new monthly low. Weekly chart. Oh, before we leave the weekly chart, RSI is flattening out, but you can construe this as one of two ways, right? One is the negative. Head and shoulders setup on RSI. As a matter of fact, I identified that the last time I went over this chart. And technically, we're down below the prior shoulder. The other way to look at it is in the bull case, is that we are flattening out, and we could be getting ready to hook back up. So the jury's out. Now, on the month, we were up considerably higher, and this reminds me of BMY. And what would I be looking for to short it? Right? We broke down, just like on BMY, monthly support broken. But this month, we've rallied back in an effort to try to recapture that prior support. Came close, no cigar, faded. Very, very bad stuff. But we are still up on the month. 4 trading days left to go. A lot can happen. Weekly chart. Moving averages, not going in the right direction. Do we have a bottom here? I keep picking the wrong tool. Remove. Maybe. On spec, just use a stop loss right below the lows of let me get you a number. 1760 per share. Oh, that's actually $17 per share. It's hard for me to read. Can I increase the font size? I can't. Too bad. So $17 a share. You need to be out. Should we break down below that support level? If we begin to move up higher, good stuff. Lots of upside potential there. I would stay very, very small until such time as we broke out and above this upper band of resistance. It's not letting me set an alert there for whatever reason. How dare they? I worked around this one time. All right. If we break out above this upper band of resistance, you could add more to that trade, but I would stay small right now. If you stop out small. No big deal. Daily chart. All right, so we had a short covering rally from the 22nd to Friday. We hit resistance. We backed off. I wouldn't be a buyer here. I'd be looking for a pullback and a higher low. Then I would buy on that pullback with a stop right below what we just discussed. Excuse me. I'm live streaming. Can you repeat that?
Yes. Do you think I should put the redder hair color in my hair or the darkest brown one?
If I had the time, I would take a poll from the audience, but I would go with the redder.
Okay.
Yeah.
Thank you, bye.
Bye.
Thank you. Bye.
Bye. Love that. All right. So Joe, hold on. We got the audience. Damn, I should have asked this earlier. All right. So Joseph Gardner said dark brown. William with the lulls. Jody. If stocks were that easy, I would be a trillionaire. Very, very true. John Spencer, red, good man. Anthony, Reddit. Any blonde available? That wasn't my option. If I bring it up, then I'm a son of a bitch. So I don't even bring that up. I've done it in the past. I learned my lesson. I was given an option. I chose. I move on. Live to play another day. So this is what happens when you get these grays. You get a little bit more wiser. Wow, this is a very popular topic tonight. I'm going to share this with you later on. Go with darkish brown. In my own opinion, Randy, I respect your opinion. She has done the darkish brown before. That's why I didn't go with that. I haven't seen her with the reddish look yet. So we'll see how that plays out. And I will share with you. Yeah, I do that and I'll get killed. Now here's Franklin, an aristocrat. Depends on what she is wearing. I love it. Awesome. All right. We have a bunch of requests to get through. All right, so Facebook. Oh, leaving off with Kirkland. Wait for that pullback, high or low. Nibble with a tight stop right below the lows that we just discussed. Facebook. Facebook got hammered last week. I don't like Facebook. You know, we have a few trading days left to go in the week, right? But let's pretend that tomorrow is October 1st. This candlestick is in the book. Here's the problem, is that this is a bearish engulfing bar. Now, we've been here before. We've had this before back here. And it did not result in a major sell-off. It was just, you just went into a major consolidation. And then we broke out. So be forewarned, this is out there. Monthly charts matter. So we always begin with monthly and weekly charts to identify what's going on from that 100,000 foot view. So we eliminate the noise of a daily chart and, God forbid, an intraday chart. So the monthly view, that higher level view, is not looking good for Facebook. Weekly chart. Now, the weekly chart, obviously a pretty big sell-off last week. We bounced off of support. Let's get rid of this. This is expired now, or it alerted. Okay. So I didn't mean to take my annotation off. So it did pretty much as we expected. The last time we went over this chart, it overshot the algorithm support in green, right? But we identified a support level that we liked as well, but we kept the sensitivity to engulf the algorithmic support level in green, and it fired off. So the question is, do we test again? I don't think we're going to break right through it this week or possibly even next week. I think we're going to rally back in the next several trading days. And the question is, do we break out to new all-time highs, or do we put in a lower high and roll over? My typing skills are not up to it tonight. All right, so we just reset our alert here on Facebook. Volume is very heavy. 2 sequential weeks of institutional distribution. Daily chart. Friday was a very good day. A nice reversal day. Could there be more fuel in the tank? Sure. Watch for resistance at or around 869 and rising. So it's probably got more fuel in the tank here. Just remember that monthly chart. Let's take a look at, this is for John Spencer, TBT. Falcon, 32 watching and only 11 likes. Were you people watching? Please smash the like button, folks. It helps me out with the YouTube algorithm so much lately. Joseph, madman, dark blue lingerie. Let's see what else we got here. Rick Roofing, what's up with you, brother? Hope you had a good weekend. All right. Let's take a look at TBT. I'm going to go back to John's question earlier. Let's see. John. Let's bring it up. Okay. Hey, how would you play TTT or TBT long using options? Any comments on USD? We discussed that somewhat. The USD. TBT is that's the ultra short ETF, which spiked up last week. Okay. I got to let that digest. What's TTT? Is that the long or is that another short ETF? I know TBT. I'm not familiar with TTT. All right, so you have 2 treasury bonds that you're looking to, or ETFs that you're looking to short. Both are leveraged. So that's an ultra short 20-year TBT, I believe, is a 20-year as well, no? Yeah, so we'll just go over the TBT. I think it's more liquid. Before I leave, this is FedEx last week. Talk about a sell-off here. Canary in the coal mine, transports. Okay. I want to war game this out a little bit. I thought I had this saved. I guess I don't. All right, let's do this. All right, so doing that higher level view thing. All right. How I would play this using call options, I would definitely use a call spread. Now, a call spread, why do I keep doing that guy? God damn it. Weekly chart. All right, so a call spread. John, how good are you with deltas? I'll share with you what I usually do when I do an options trade, a call spread or a put spread. Is I look at the I look to buy a 70 delta. In this case, I would look to buy a 70 delta call option. Simultaneously, I would sell a 30 delta call option. So you're buying an in the money call option, you're selling it out of the money call option to help finance the purchase of that trade. Because if it doesn't take off right away, at least you have that put option, which is expiring as well. And that offsets some of the time decay on the 70 call option. And you don't have as much, you have a more intrinsic value in that 70 delta, a call option. So the time decay is not as concerning, whereas it's big time concerning when you're selling a 30 delta out of the money call option. So on a weekly time frame, you could argue that we broke out last week. Let's just say we closed at support. Okay? Resistance, I should say. What I want to see here, I love the setup. I love the consolidation. I love the higher lows. What I want to see is a retest next week of, let's say it's, what do we close? 17.71, 1750, and then a new weekly high off of that retest. I would then open up that call spread. And I would look at the 1850 mark at a point where you're going to get some resistance up there. So I don't know how big I would get with this trade because you're not that far away from some resistance. And remember, we have been in a very, very long term bear market on the TBT, a bull market on bonds. So you're going to have a lot of prior buyers of this ETF looking to get made whole. So when you hit 1827 to say 1875, you're going to have a tranche of sellers looking to get made whole. So you're going to have to really book those profits quickly, scalp it. I would not stay long. I would not bet using short-term call options that we're going to break through that 1827, 1875 mark. You're going to want to sell that strength. That's how I would play it. Let's take a look at a daily chart. So the daily chart is probably a better tool to use since you're going to be doing a short duration trade. And I would go out on time with this trade. Try to be around the 55 to 60 day mark, because at that 45 day mark, you see time decay pick up pretty dramatically between 45 and 30 days to expiration. That's when time decay starts to really ramp up. So on a daily chart, I said 1750 earlier. I like 1730 better. You get a pullback to 1730. You can choose to open up the call spread there or wait for a new weekly continuation breakout. But keep in mind that the value of the option, the implied value, the implied volatility of the option, you start breaking out to a new weekly high, is probably going to rise, costing you more money for that call option, but you also get paid more for that selling that out of the money option. So there's a little bit of an offset there. All right, so let's take that comment off. Okay, so what else do we have? That was it. What time do we have? 7:14. I wish I could take more, folks, but I wanted to save some time to go over any changes in futures. Then gold lost some ground since we last went over it. And we're seeing some buying now. This is only a 5-minute chart, though. I hate 5-minute charts. I think we're going to pop up higher. This is a 15-minute chart. Let's take a look at equities. Well, first, you know what? The U.S. dollar. Dollar's a bit lethargic. Let's go to bonds. Then we'll go to equities. Bonds continuing to weaken up here. That means yields are rising yet again. So you want to look at the reflation trade this week. If this continues into tomorrow morning, banks, energy, huge energy, transports, airlines, monster week last week for the airlines. Silver now down. It was up earlier. Let's take a look at equities. Mid caps up 0.18%. S&P 500 pretty much unchanged here. It looks as though the path of least resistance remains to the upside. Russell 2000 up over a 0.25 percentage point. And we will leave it off with the Nas. Nasdaq is now down. Nasdaq is down. But it's down fractionally. So no big deal. All right, with that, it's quiet night. No big news here. I just want to check in with the euro again. Because Germany is the pimp Mac Daddy of the Eurozone. And the euro is unchanged. With that, folks, hey, folks, thanks for joining in. Love having you here. Thanks for spending a little bit of time with me on a Sunday night. I know your time is valuable. Don't forget, TrendSpider, for those folks that just joined in, please take advantage of that 35% discount code by using the link below. I give it away free to silver and gold level members. Go over to my website, sign up there, and get it free. And with that, folks, everybody have a profitable trading week. Be well.